Good evening, ladies. My name is Rhonda Mannes. I am a CPA here in Las Vegas, Nevada. I specialize in home-based businesses. I'm here tonight to talk to you about making sure you don't pay $1 more in taxes than you legally should, also known as being tax advantageous. Everyone wants to save money during tax season, but keeping records is the key to truly saving money and keeping your return audit-proof. Your date book must be kept current. When you're out recruiting clients, you must record the 4 W's and H questions: who, when, where, why, and how much. If your expenses are more than $75 for a meal, you should keep a receipt. By keeping a day runner, whether it be in electronic form or a paper day runner, you will audit-proof your books when the IRS comes knocking. Just having a pile of receipts, although they're good, will not stand up. You have to have your day runner. If you travel for business, you must keep all travel receipts. Car expenses are one of the biggest sources of deductions for your business. Mileage must be kept. Why? Because your business mileage will be a percentage of your total mileage, and that is how we determine what percentage of your car expenses, whether we use actual or mileage rate, will be deductible. And I'll talk to you a little bit more about that. One key method of taking all your deductions is to actually attend all of these meetings, all of your official meetings. When you go and you record your time recruiting, that's key. You want to make sure you keep track of your mileage, any expenses for those meetings, and products purchased. As far as your home office, how many of us have studios in our home where we demonstrate to clients? The IRS is relaxing those rules. They've made a area acceptable for a deduction as opposed to just one specific room. It used to have to be a dedicated room. Now it can be an area, so you can take the room and let's say you use half your laundry room for storage of products, you add the total square footage. The IRS will do a standard deduction for a home office deduction up to $1,500, or if you have a home or something bigger than 300 square feet, you can actually take a percentage of the household. Your inventory, I cannot stress this enough. Your inventory should be kept on a cost basis. How many of us take products from our inventory to either use as testers or for personal use? Keep track of those items. They have to come out at the end of the year. So you should have a beginning of the year inventory, track all your purchases, and you have your end of year inventory. So you'll account for spoiled goods, goods withdrawn for personal use, gifts may be given away, and then you come to your ending inventory.
Rhonda, about that, what about promotion?
Promotional items, if you've given pieces of inventory away, that should be deducted from your inventory cost too. And
so you keep a record of that?
Keep a record of that because it will not count on your inventory, but you can expense it as a promotional item later on.
Okay.
All right, so before you decide on who will prepare your return, you should be aware of a very new crucial IRS rule. It used to be that pretty much anyone could prepare your return. The IRS has now made a rule that states if the person is not a CPA, an enrolled agent, or an attorney, they must be what they call a registered return preparer. This is someone that passes an IRS exam every single year. If they don't, and your return is questioned by the IRS, that person cannot represent you if they're not they don't have one of those credentials. So you really want to be careful about who you're hiring or paying to prepare your return. If you have decided to use my services and you have not before, please include birthdays, social security numbers. You'll give me all of that pertinent information. And especially if you have children underage. Who has children under the age of 17 here? Grandchildren, maybe? You can pay these children and deduct that as wages or amounts paid to them.
To grandkids?
Yeah.
Absolutely. And it doesn't have to hit their pocket either. It can be put away for their gym lesson, their dancing lessons, whatever. And if it's under $600, there's no 1099 there. So I want to talk to you about, I've actually prepared worksheets, which are blueprints, because some of you may not actually have books per se. I know that some people use QuickBooks, which is wonderful. I'm a QuickBooks Pro advisor, but let's say you're relatively new in the business, maybe just a few years. You're generating maybe under $50,000 in sales a year. Okay, you don't have a huge downline. I'm going to give you a couple of guidelines which will keep you safe. First, do not commingle your funds. In other words, don't spend your business purse, okay? Because if you got a $100 sale, you've got to replenish that inventory and use it for some other things. Keep a business bank account and a personal bank account. You need money for your personal account, take a check, make your transfer to your personal. If you're going to charge items, either use your business debit card or a designated credit card for the business. Don't commingle if you can possibly help it. All right, so I'm looking at this. This is pretty standard, okay? It looks a little daunting, but I can show you that it's really easy steps. You've got your total sales tickets for the year, which you're going to make a certain amount of sales, and then doesn't SeneGence give you a 1099 as well?
Yes,
Right.
for commissions, yes.
For commissions. But then you also have your other sales, which I think don't come in under that.
Right.
So you're going to have your sales tickets, your commissions, and then for inventory, it's always wholesale prices, what it cost you. So you'll have your beginning inventory, and then you'll have your purchases, your ending inventory, and your personal use. Add in any materials used to package, like Jerry has those beautiful little lips on the plastic bags. Labor hire to package or deliver the product, and any incoming freight or expired or discontinued inventory or items that you used to give away for samples, that kind of thing. You've got basic items here, advertising, bad debts. Then I want to get down to your second most biggest deduction is your car. Your car. You must track all your miles every year. So really easy. Take your beginning January mileage, or if you maybe around Christmas time took your car in for a once over, get the mileage at that service, and figure out every day pretty much how much you go. Like if you're in the habit, I know I'm in the habit of letting my car go to half empty and fill it. I know my tank holds 300 miles to a tank. So if I fill it every other week or every week, you can figure out your mileage. Then but you do have to absolutely track how much of it's for business. Monthly meetings, meetings to the post office, meetings to deliver trips to deliver products, trips to visit with other SeneGence people. Now I want to draw a really big point. The fact that you're walking around with the lipstick on your hand, I know that's the mark of every good SeneGence distributor. It does not mean that you're working. You have to actually actively be doing something. Now, if you take a trip, the fact that you gave someone your card isn't good. If you were actually there and doing a demonstration every day, or had some business purpose during every day of that trip, deductible. And I actually had a client take a trip to Ireland once, and she took her husband. Now he didn't do anything, so he didn't get to deduct it, but she did something every day. She sold gift products. She met with different tapestry makers, different pottery designers, and she deducted that trip. She had it all written and accounted for, and it was deductible. Now let's say you go on a SeneGence trip. I know they give great trips, okay, but let's say the families are going, or it's a SeneGence trip, excuse me, at a reduced price. I don't know, do they have those? When
Yes.
you go right. And your husband goes with you. Well, if it's a family trip, guess what? You need to take your spouse because it's a family trip. So make sure again that it's all about SeneGence, that you're conducting business. I'm sure that the spouses take trips different places together. The guys go out golf, whatever. And are there any men SeneGence reps?
There's a couple.
Oh, okay, I was just kind of curious. So you need to track your car mileage. Now you can do it two ways. Let's say I have a brand spanking new Cadillac. One of those cars is pretty pricey.
That.
What?
Sorry.
Okay.
Video's going. Sorry.
Kathy Houlihan has one.
Okay, so
Brand spanking new.
SeneGence is leasing for me, so
Okay.
that's a whole different.
Okay, well, no, that's fine. You have a car, let's say I had one that I got myself, all right? Then it might make sense to use actual expenses because it's depreciation, it's the gas, the oil changes, the insurance, and then I figure out which one's going to give me more. The trick is when you pick one, you keep one. You can't bounce back and forth. Now,
You're meaning that either you do that or
the
you do mileage.
Right, exactly. Now, Kathy's getting a car lease, she just said,
Right.
right here. You still figure your actual expenses, Kathy, but then you reduce it by how much you were reimbursed by SeneGence. Okay, so you're not out of luck, you still can take the remainder. So that's the good part. So if they're not paying a piece of the insurance or they're not paying for the gas and the oil changes, you still get those.
They make the payment or a portion of the payment.
Portion they don't
So,
make.
yeah.
So that's the good news. You also get to depreciate items. Now, this is the key thing that's been driving every accountant crazy and probably why the person from the Big Six wouldn't touch your return. The healthcare law, which I've got a little insert about, which I'll talk to you after this video because it doesn't pertain to home-based business, is a big thing. But depreciation, they've changed certain rules. But the good news is you get to depreciate up to $25,000 of products that you buy. Now, not your car and your house, okay, but we're talking about if you have to buy a computer, if you have to buy a new tablet to be on the go. I have a beautiful Microsoft Surface Pro I'm running around with to clients, things like that.
Is that per year?
Per year right now. It used to be a lot more, but it's down to $25,000 is still quite a bit.
Yeah.
You must keep a record, date purchase price. Keep your receipts on this. This is important. All right, these are items which are not used up, which are in excess of $200. The new rule is $200. Whoever does your taxes, make sure they take the new elections for depreciation deductions. Thank you. Now I'm going to talk to you about, make sure who doesn't have business insurance on their stuff at home. So you've got all your products sitting at home with no insurance on it?
Does that homeowners cover it?
No. Nope.
It did
Yeah.
when I had my truck stolen. They replaced the value of the
That's
product that was in the car.
That was whatever was in the car. Well, I'm telling you, if you keep a good amount of inventory, I know Jerry keeps a pretty sizable set of testers and so forth in her studio. I've seen a lot of places not cover it. So be careful you've got that. And that's deductible. So you can get a business rider on your insurance.
Can I ask a question?
Yes, sir.
Is that because it's business product versus just your home contents?
Yes.
Okay.
And often it's much pricier. Your interest, which is deductible on your business credit cards, business loans. My fees are deductible, and any attorney's fees pertaining to business, okay, not family matters, is deductible. Your office expense, and your rent. Now that could be renting if you're renting an external office, which probably wouldn't pertain to many of you here. But if you rent a house or an apartment and you've got an in-home office, that portion of the rent is deductible. Any repairs you get to take a portion of. If it's directly in the office, you get to take the whole thing. Supplies, taxes paid, I will tell you, your federal income taxes are not deductible. But if you pay sales taxes, things like that, which brings me to the important thing I'm hearing a lot about. People are discounting products, and when they're charging sales tax, okay, and then they're discounting at the bottom. If you're going to discount your product, only charge sales tax on the discounted amount. Does that make sense to you? Because otherwise you're collecting too much and not enough is being paid. So you need to be careful about that. Meals and entertainment, big area where they're still watching people. Meals and entertainment, this Starbucks, you know, because you're on your way to your morning yoga class is not deductible. Okay, I'm sorry to break it to you. You've got to be meeting someone. If I'm meeting Jerry and she's going to show me the newest line of color that's coming out, and we're doing this over Starbucks, that's deductible. If I'm meeting with Jerry and I'm introducing her to a new recruit, that's deductible. Things like that. If Jerry picks up a box of cookies and a jug of, I don't know, wine to bring to a meeting, that's deductible. Other expenses, bank charges, again, just want to run back to meals and entertainment. This is where those 4 things are important in your day timer or day runner or calendar or whatever you want to call it. Who, where, why, how much.
And then Rhonda,
Yes.
one of the big things I remember you telling me is your phone is not,
Oh yes,
You can't-
big thing at the
Yeah.
IRS this year.
yeah,
Your phones, okay, it always used to be, and I'm probably dating myself, when I grew up, not everybody had a phone in the house. Then everyone had a phone. Your first line is not deductible in your home. If you only have one line and you're using that for business, then only your long distance for business would be deductible. All right? If you have a secondary business line, that's completely deductible. If now the same is true with a cell phone, the IRS took the same position. First cell line, not deductible. I was at an audit. The IRS agent had shared this little tidbit with me. It didn't pertain to my audit, but we started exchanging information about what was deductible, what wasn't deductible. And I said, wait a minute, I would not have this beautiful smartphone that gives me navigation and text messaging and email and has a calculator on it if I wasn't in business and running around. I'd get one of those little, prepaid throwaway phones. And he said, well, I said, you've got to understand that every real estate agent, I have quite a few of those, myself as an accountant, and people in outside sales need this. So we finally came to the agreement that extra services and extra data plans, etc.,
changed
would probably run
and start
about,
over for another
absolutely.
video. Can you
Sales
answer that?
tax. Kathy Houlihan here just mentioned to me that SeneGence collects the sales tax up front, and you want your sales tax back. That's fine. Charge them full price. You give me your client a rebate. I don't care what you want, what it's for, but it's a rebate, and now you charge them full price, and they've gotten that money back afterwards.
To be clear, what you're saying
Yes.
there is you can charge them full retail tax
Yes,
and then give them a rebate.
absolutely.
So,
We're
okay.
not taxing them on the discounted price
No.
because that would be
Right.
not correct.
That's after the fact.
Now the other thing is when I mentioned the phone originally, you were talking about calendars, and the calendars on people's phone, you have to have it written down, right? You
Correct.
can't.
It could be an electronic form on your phone. Absolutely.
But it has to be printed out. Like if you were going to
No,
an
you
audit.
can store it in electronic form. I mean, I don't think the auditor's going to want to be looking at your phone. I would make sure I could put it on a computer and print it out for that. So
Right.
make sure you have that capability. One good calendar is Google. because if you have it in Google, there's a spot for notes about the thing, and you can expand on your calendar later on and print out different things about it. And the nice thing about the Google Calendar is once I have it on my Google Calendar, it'll be on my computer, it'll be on my cell phone, it'll be on my laptop, so it's all places. I talked about meals and entertainment. Education, every time you go to a seminar, that's deductible. Right, so just clear on that. Dues to different organizations, deductible. Dues to a country club, not deductible.
Dues
So-
to a networking group?
Deductible. Now, I'm glad you brought up networking groups. The dues to a networking group are deductible. The fees, where there are breakfast or lunch, are meals and entertainment. Make no mistake, the IRS will call them that.
Even when you're talking about business,
Yes.
that's what it's all about.
Meals and entertainment, and it's deductible at a 50% ratio.
It is deductible, but at a 50%
50%,
ratio.
yes.
Okay.
Credit card processing fees are deductible. Your internet service at home, absolutely deductible. If you're paying for internet on your phone, in addition, that's part of that $25 a month we talked about. Gifts given. Gifts should be no more than $25 per gift. So make sure that there are lots of nice discounted gifts at $25. Wireless service in the house. All right. And I've talked to you about your home office expense too. So I think I've covered quite a bit. I want to stop now, and I want questions so that I don't want to bore you to death. I want to
I have a question.
Sure.
The receipts, when you're talking about an item over $75, is it acceptable just to keep that? I do everything on American Express, so I could pull up those for years and years.
You should keep all your American Express statements with your business expenses highlighted. I would hope you have a business American
Yeah,
Express.
it's all business,
Okay.
but I don't like pieces of paper ever.
I don't
so
like pieces of paper
Yeah.
either, but
Nobody
the IRS
does.
At $75 or more. I would suggest that you scan it and keep it in a folder on your computer that's backed up by year
Okay.
for those things. I would, just to bulletproof it, because what's really nice is when we were at Jerry's audit, being she volunteered herself, we had a very disgruntled agent. She wasn't a happy person to start with, but that's another story.
I don't think any of them are happy, are they?
No, but she was having some emotional issues that day anyway, but don't we all? So we were there, and she'd ask a few questions, and then she'd ask Jerry about the lipstick. She kept looking at it, go, wow, it doesn't come off, you know? So she would look at my computer printout of different expenses, and she'd go, I want to see the expense for that date, and we'd pull up the bank statement, or we'd take out she'd pick out like a meal of $75 or a travel receipt, and I'd have to pull out that receipt.
And I had all of them.
We had every last one. I made Jerry prepare like a wild woman. She
Yes.
must have not slept. We had a calendar. When I went like this and I kind of fanned through the pages, that we have every date here. She said, where were you on June 25th? Boom. And we only had to do maybe one or two of those kind of things.
Yeah.
She got a little excited when we got to the mileage of the car. There was a discrepancy. She was using the wrong mileage rate for that year.
Yeah.
Remember that? That finished the audit. That was it. So you really do have to keep some certain receipts. All travel, meal, any other item, $75.
And you have to keep them for 7 years.
Yes, if you look at my website, there's a list under tax tips, and it will tell you how long you should keep various documents. There's an ongoing blog, which is pretty active about tax topics. There's an IRS refund there's a link to the IRS refund tracking site there. So you can do a lot on
What
that
is your
website.
website?
It's RAM Tax Prep at it's ramtaxprep.com.
ramtaxprep.com.
Yep.
Okay. Thank you, Rhonda.
Thank you. Hobby versus business. a lot of you may find yourself with a loss, especially your first couple of years working for SeneGence. What happens is, this is perfectly acceptable. All you have to show is that you have an ongoing business, and how this is shown is by your day runner. Again, I told you that you're attending regular meetings, and this is not something you do on occasion. This is a daily, weekly activity. This is not something once a month. In this way,
Can I just say something about
Sure.
that? If you have a website, that shows that you're working your business too, right? Like if you
absolutely.
have a business
All helps.
website. Yeah.
Business license, business EIN, website, you've got regular business cards that you're passing out, a Facebook page, a LinkedIn presence, Twitter accounts. These are all ongoing signs of business. And of course, we're back to the day runner. If you do not have these things and you consistently show a loss, especially after several years, they will designate your business as a hobby. I just had that this year. Had a woman that was a photographer. Her husband retired. They moved to Utah. They came in to prepare their taxes. She showed me $500 and $3,000 of expenses. So $5,000 income, $3,000. And I looked at it. I said, "Didn't you just say you retired to Utah?" "Yes." "So how did you have this photography business?" "Well, I did a favor for a friend." This is a hobby. So you get to deduct your losses to the extent of income. Income will go on on the front of your 1040 as other income. And then expenses would be back on Schedule A under hobby losses. She had no hobby losses. She had no hobby because it was a zeroed out, so we just said, "You know what, this is fine. You don't have any income." She didn't have that. She didn't have income. If she had had a total income, she would have had to include the income on front page, expenses on Schedule A. So you don't want to do that. You want to make sure you show that you've got an ongoing business so that they don't designate it as a hobby and disallow those losses, and put that income on the front page of your return. That's it.